Good morning and welcome to Saturday's Join the Dots. Now this is being recorded on Thursday just so that you know that I'm not up to date with the market prices towards the end of the week. At the moment I look at the prices, silver is 40.89 and gold 35.41. Now they've both gone through significant levels, silver through 40, gold through 3,500. And that happened at the beginning of the week. Where it ends up at the end of the week we won't know. What I want to talk about today, and I want to keep this quite short and sharp because I gave you an awful lot of links yesterday, and I really want you to read those or open them and look at them. Okay, and there were 6 or 7, so I know it's a long time, so I'll try and keep this video short, and then you can perhaps spend the time on those links because they're so important, so important. You can't expect to prepare for something without any preparation. It's just not possible in this world. And the world is so complicated now, so utterly complicated and so confused and so self-destructive. It's just, you know, you need to prepare. You need to make some effort to read, find the information, see what's truly happening, not what the 9 o'clock news tells you, because they haven't got a clue. And if they have got a clue, they're not going to tell you because they're programmed not to tell you the real picture. I want to talk today about bonds because on Friday's video I told you about everyone was beginning to see the crisis in the bond market, whether it's the market sniper, whether it's George Gannon, anyone who's thinking can see the crisis in the bond markets developing. Really can. And just as an aside, I just opened my phone a few minutes ago and I see Investors Daily. I don't know whether you subscribe to that. Mortgage fraudsters are inflating a stock market bubble again. There's a link there and it's a clever link. Joining these 2 dots, people are taking out additional mortgages to invest in a stock market bubble. And they will probably be taking out mortgages on inflated prices on their property to go into a stock market bubble that's about to burst. Can you see the obvious dangers? Can you see it? It's just a disaster. And we're going to see it because I've already told you the US property market is falling. Do you remember that Eurodollar University one where it said it's spreading? The falls are spreading. Okay, started in Florida and a few other states. They're spreading. It's going to be everything is systemic because everything is systemically wrong. No more is it systemically wrong than the Japanese bond market. And we've talked about this, and I talked about this in the early days when we were talking about Claver and his view on how XRP could be used to manage the unwind of a Japanese carry trade. Something is going to have to unwind, something is going to have to be used, I promise you. I promise you, because this is going to be a mess of epic proportions. I'm not exaggerating, I'm probably underplaying it. To just show you, right? So Japanese bonds, Japan has debt at over 250% of GDP. Now everyone's going potty in America about 110%. Japan is 250%. Their GDP is 4 trillion. Their bond issuance is 10 trillion. Now, of that 10 trillion, who's holding it? Is it American investors? Is it English investors? Is it Australian? It's the Bank of Japan's holding 7 trillion. So the central bank of Japan owns 70% of Japan government long-term bonds. Please excuse the noise. And the banks and pension funds own 2.5 trillion. That's 9.5 trillion. No, there's no one outside Japan owns Japanese bonds because they're awful. They were paying half, they were paying 1% just 2 years ago. They're now paying 3.2. Okay? So what is their value? If you bought a 30-year bond 2 years ago and it was going to pay you 1% for 30 years, and now the market rate is 3.26%. What is your bond worth? You're losing 2.26% every year for the next 28 years. What's your bond worth? So what's the Japanese Bank of Japan, what's its bond portfolio really worth? Do you remember we looked at the US banks, I think it was Eurodollar University again, and we looked at 328 billion from memory, or 428 billion of losses on bond holdings within the US banking system. 420 billion of losses. Let me tell you, Nippon Life, it's a mutual insurance fund, has 28 billion of losses. I mean, these are just numbers that are ridiculous. They're so ridiculous, no one actually sort of does anything about them when they hear them. They just sort of park it, ignore it. I can't cope with that. These companies are mainly bust. They're mainly bust. The Bank of Japan is sitting on well, hold on, who is the Bank of Japan? It's sitting on 7 trillion of Japanese bonds issued by the government. Without the Bank of Japan, Japan's 7 trillion underwater. So how much underwater is the Bank of Japan holding all these bonds? 7 trillion of bonds. How much? You are not getting the truth, are you? You're not getting this information. It is an unholy disaster out there. I'll come back to more topical now, and I want to cut this quite short. China. So I told you on Monday, okay, I told you that there was a huge article out of Bloomberg saying that the Chinese stock market was unbelievably strong. And I pointed out that it had been 6,000 in 2009, it had been 5,000 in 2016, and it was 3,800 the day that Bloomberg said it was unbelievably strong. Well, it's fallen the last 4 days. And now there's even an article out today in the press saying that China is trying to control the frenzy. Well, it's not. It's trying to explain the losses because they're coming. They're coming. Who was buying that stock market? It just goes to show we're being told a complete bunch of hogwash, especially by the financial and corporate media. It's hogwash. You could almost think that Bloomberg did a pump and dump on the Chinese stock market, didn't they? Pump it up and then dump the shares. Who knows? Who knows in this world? Anyway, so I'll cut it short. We'll come back tomorrow and I'll try and do a sort of roundup of the week because it has been a huge week. As I say, I'm Thursday morning here now, so I can't tell you what happened Thursday and Friday with gold, silver, the bond markets, etc. But I will come back Sunday and we'll do a market wrap. I'll leave you with one link today, and that's George Gannon, an excellent piece on gold and silver. Please watch it. George is good, and please have a great weekend. And catch up on those links I sent you yesterday. There's a lot there and I know that. Please catch up on those. Thanks very much.